Happy Friday, folks. Anthony Speciale here with Speciale Analysis for another edition of Unedited and On the Edge of the Market. Hope you had a great week. Hope you are gearing up for your Memorial Day weekend. Guys, this weekend is near and dear to me. I'm a big supporter of the United States military. My heart hurts when we lose a service member. And I hope that you all take a moment this weekend to just reflect. You know, if you have a family member who's a veteran, call them. Just say, hey, listen, you may know somebody who passed away in the military, and I'm thinking of you. I'm thinking of them. I'm thinking of our country and those who have made the ultimate sacrifice. It's just a special weekend. It's just a quick message I wanted to share with you as it kind of hits home with me. Regarding the market, what I wanted to talk about today was how do we manage losses? Now, this is something that your average sales guru doesn't ever talk about. Nobody wants to talk about losses. We want to talk about all the beautiful winning trades we have, but nobody ever wants to talk about the dumpster fire. But for me, it's really important because taking losses in the market is part of trading. If you can't stomach losses, then you shouldn't be trading. You shouldn't even be investing. If you cannot stomach the risk, it's not for you. It's that simple. My job, when I help my students, when I mentor folks, is to try to help them limit those losses and to mitigate the damage when the damage is, when there's damage to be had. Again, it's unavoidable. Doesn't matter how good of a trader you think you are. You will lose money at some point in time. If somebody tells you they never lose, they're a fucking liar. Pardon my language, but I'll call it right out and just say it the way it is. They are a flat out liar. And it's not cool. So don't buy the bullshit. Let's talk about some real stuff. So we've been watching a particular company. I'm going to open it up for you. Citigroup. This is in the financial sector. It's a bank. I'm sure you've all heard of Citigroup before. We identified a channel structure, this blue channel structure. We identified a breakout indicated by the arrow. That breakout confirmed our 1% blueprint on a weekly basis. So this checked all the boxes. This basically was, hey, time to set up the trade, time to book some profits. Now, as sexy as that sounds, it doesn't always work. Listen, when the broader markets pull in one direction or the other, I don't care which stocks you own, unless you're in a sector that is fighting that push and pull, you're going with it. When these big moves occur, you're going with it. So we've been in this overall downtrend for the past couple weeks, and this past week, we have had what's called a relief rally or a short covering rally. Is it trend changing? Not necessarily. But what it is it is exactly what I just said, a relief rally or short covering rally. So when you're trading with the trend and the overall trend is down, so taking short positions, you will at some point in time in your career catch a situation where a relief rally occurs while you're shorting the market, or a short covering rally occurs when you're shorting the market. Just like you'll get a correction to the upside when you're buying the market long. It's going to happen. It's unavoidable. It doesn't mean the trend has changed, but it does mean that, this occurrence could be devastating to your positions. So I want to take a little closer look at this position and show you just how I managed it. Because again, we know we can't avoid all losses. But when there are opportunities, and there aren't always, but when there are opportunities to mitigate damage, we absolutely need to put them in play. There's no reason not to. So, here's the big channel structure on the way down. You can see resistance, 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 support, 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 support. Okay, we've identified the channel. Clean, clear, understood. No problem. Here's the break. The break is what triggers the entry. So I'm just measuring from the channel structure to the close of the candle, approximately 1.97%. We need at least 1% on a weekly basis. We got 1.97, so we got nearly 2% confirmation. All right, so in my opinion, we're off to the races. We identify some targets. We place our target objective where we would like to exit the trade. So we're short at 54, stop at 58.50, target at 42. Reward is bigger than the risk at the entry. We like it. We enter this trade. And this trade kind of flutters around for several weeks. And then it sells off with the broader market. And you are feeling fantastic. Like you are on top of the world. I nailed this trade. I got it. I know what I'm doing. I'm God's gift to trading. You feel fantastic. Well, not to get your panties in a bunch, but when a relief rally or a short covering rally comes along, and the big institutions that have much more buying and selling power than we do, individually and collectively as retail traders, come in and go, you know what? It's time to cover some of our shorts. Well, guess what's going to happen? Price is going to shoot back up because a lot of buying has come in. So you can see, again, sideways for a couple weeks, but then we retested resistance, and then we sold off. And we sold off really nicely. We came as low as 45. The low was 45.40. So we were headed in the right direction. And then all of a sudden, the last 2 weeks came along. We came back, retested resistance. Resistance held. Then we had a gap open this week, and we have now traded through our entry. This is the reality of trading. Listen, again, your so-called sales gurus out there are just going to tell you what you want to hear, so you buy their product for $19.47, for $19.97 or $14.97, and then they're going to upsell you, and then next week they're going to sell you something different, and then in 3 weeks they're going to pitch you their next great idea, and before you know it, you spend 10 grand, you got all these products, and none of them work. They're all a piece of shit. I'm going to push all that aside, and I'm doing this all for free. I want you to be aware that this does happen. This will happen more times than not. It is what it is. So how do we mitigate it? Because we started with a fairly wide stop. So our entry stop to our entry, we were risking approximately 10.61%. Now listen, is that huge? No. 10% is about the sweet spot. You don't want to really risk more than 10%. But if the trade goes against us, ideally we would like to lose as little as possible. So in order to achieve that, we need to read the price action. The price action is always going to tell the story. So what I see is this candle right here. You can see within this week, price traded up through our entry into the channel and then fell again, and then price followed through the following week. So for me, this was the opportunity to say, right in this area, if price comes back to it, that's where we probably want to get out. We can now isolate where that new area of resistance is, where that new stack of sell orders sits. We can kind of tell what we can understand what the market's telling us. So I advanced my stop from 58.50 to 54.10. So I saved myself approximately 7.66% worth of risk. So in total, now I am only risking about 3.31%. If you are going to have a trade go bad, if you're going to have a good winning trade turn into a losing trade, the best way you can have it transpire is have it transpire into this. About a 3.5% loss. 3.25% loss. So it's so important that as a trade progresses that you manage it properly. Because this is the way that you can mitigate your losses. We don't want to take big losses. If it's not working, we want to get out as soon and as quick as possible. We want to get out of it. We don't want to be part of it anymore. It's over. It's done. It's shit the bed. That's it. It's gone. It's done. We don't want to hold on to losers, hoping and thinking that we were right and the market was wrong. Trust me, the market is always right. You are always wrong. That's the deal. Suck it up. That's reality. Period. End of discussion. If you live by those rules and play by those rules, you can be wildly successful in this business. So we took a 10% risk, we shrunk it down to about 3.31%, and we've been stopped out. No big deal. We made 9.5% on Apple just a couple days ago. So even if I take my 3.5% loss, I'm still up 6% over 2 trades. I can live with that. I'm sure you can live with that too. You should be ecstatic with that. So when you put together a bundle or a handful of trades that you're trading and monitoring and so on and so forth, do yourself a favor. Keep your winners big, keep your losers small, and as infrequent as possible. But if you're going to lose, which you cannot avoid, I promise you cannot avoid it. And nobody hates to lose more than I do. This is the way you want to lose. You want to lose at 3.3%. Not 10%, not 15%, not a total bath. 3%. So that was the lesson for today. The lesson for today is to keep your losers small, let your winners run, and that is how you become successful. At the end of a period of time, whether you look at it monthly, quarterly, semi-annually, annually, you want to see that your losses are small and less frequent than your large winners. And that, my friends, is how you will see your accounts grow year after year after year after year. It's no secret. It just requires discipline and consistency. And that's why I spend all this time putting these videos together for you, because that is the secret sauce. Employ it, you'll do fine. Ignore it, you'll lose your account. It is what it is. So, with that, again, I hope you're having a great week. I hope you're having a wonderful Memorial Day weekend. Take time, a minute, just reflect for those service members who have made the ultimate sacrifice. And again, if you have any service members in your life, call them. I'm sure they've lost a friend, a fellow service member, and just let them know that you're thinking about them, on this day, this Memorial Day. That is what we celebrate, the lives who were sacrificed to give us the freedoms that we have as, citizens of the United States. So with that, as always, I appreciate all of you. If you enjoyed this video, found it slightly entertaining, you learned something, hopefully it will save you some money. When your losses do come along, if you could do me a simple favor and just below the video, like it, share it, subscribe to the YouTube channel, whatever all those fancy options are, just so I can share this with more folks, because there are so many retail traders that came into the market during the pandemic with very little experience and really need this information. And it's my goal to give it to and share it with as many traders as I possibly can. And my ultimate goal is to do it 100% for free. And the only way for me to keep doing that is for it to keep being shared with others. So, again, have a blessed weekend. I appreciate you all. Thank you. And I will talk to you on Tuesday.